Everybody is wondering what the catalyst will be for a financial crisis. It could be anywhere and it could take a very long time. We have seen the markets going up and up and up, and it doesn't seem like it will ever stop. But we must understand where risk is and practice prudence when we are investing. We must understand what's happening globally as well, because financial contagion is ever present. The first thing I want to look at today is, of course, going on with the next Evergrande. The next company in line has, spoiler alert, not been able to pay back their debt. The second thing is the chaotic cold, because we are watching right now temperatures dropping and the prices that people have to pay for their energy skyrocketing, food prices as well. The third thing is actually the food inflation, because when you look at what's happening with food, that enters a moment in which it becomes too expensive for people to purchase. You get unrest and the rest follows. Let's get into that and more. Let's go. I have been covering the Evergrande situation in China all throughout, and right now I'm telling you this thing continues to spread. Chinese real estate developer Kaisa halts trading in Hong Kong as debt concerns escalate. You could see right here just another one to add to the list. Among Chinese developers, the company ranks second only to Evergrande in terms of its issuance of US dollar-denominated offshore high-yield bonds. This is a concern, obviously, not just for this particular company, which of course is tanking, but the entire financial system. It happens one at a time. Everybody was saying, it's Evergrande. Forget it. It's Evergrande. No big deal. No big deal. You don't have to worry. It's Evergrande. But then we see the spread. It's the property sector in China. That property sector, those companies, of course, you look at it a little bit further out, it's the sector itself. $62 trillion worth that real estate market is worth. You don't think that there's a little bit of an issue when it comes to that problem with other institutions, other individuals, businesses, and of course the debt that interconnects it all. Derivatives. Have we learned nothing from the housing crisis in the United States having an impact around the entire world? I'm not saying it's going to be another Lehman Brothers. I am not saying that this is going to be another situation exactly like 2008. All I'm trying to do is highlight where the risks are, and then you make your investments accordingly. That's all. This is the stock, and you could see that it has come down over the last month, basically halving in terms of its total, appreciation over the time, actually depreciation over the time, I should say. You're looking right here at Evergrande. This Evergrande right now, not doing so well. If I just show you over the last several weeks, you could see what has been happening. It's been going down. That's the weekly chart. And if we move over one, we're seeing the daily chart. It is right now at approximately the lowest it has ever been. It did bounce up right here, as you can see, huge volume. And what happened here? Oh, they're going to pay back their debt. Everything's all good, right? But of course, it comes down because that fantasy had been lost. Somebody made some money on the way up, I'm sure, but didn't last long. So I will give you the updates on that. Chinese property developer Kaisa said on Thursday that its finance unit had missed a payment on a wealth management product, adding to worries about the cash crunch at the debt-strapped company. Just like Evergrande, they had these WMPs that are ways of financing new projects. And of course, could be legitimate, but what happens when they can't pay it back? Oh, that's right, the unraveling. Kaiser's trouble come amid concerns of a deepening liquidity crisis in China's property sector, with a string of offshore debt defaults, credit rating downgrades, and sell-offs in developer shares and bonds in recent weeks. The Shenzhen-based developer, which provides a guarantee for the wealth management product, said in a statement that it's facing unprecedented liquidity pressure due to a challenging property market and rating downgrades. That's right, unprecedented liquidity pressure? What's that known as? Oh, that's right, we're going bankrupt. It said it was raising funds to ease the pressure by measures including speeding up asset sales. Is that the way you fix it? It's ranked as the 25th largest developer in the country by home sales. Now, that's pretty big. It's not the biggest, okay, fine, but we're talking about a $62 trillion market, 25th biggest. It's still significant. That's all I am trying to say. You can see what's happening right now with China's junk bond yield index skyrocketing. Why? Because the concerns are clearly on the table. So I want to break this down really slow, really simply, and just highlight why this is important. Let's go. We must understand that counterparty risk is the issue that really came up and caused havoc in 2008. There are major lockdowns right now in China that are causing extra concern on top of everything else. Worry about mass starvation and riots is, in fact, a top priority because they know how quickly things can escalate. And that brings me to my next point. Cold air forecast to sweep from the north. Coming out of China Daily, you could see what's been going on, just like other places. The cold front comes in, heating costs start to soar. But the problem is when you have a crunch, an energy crisis taking place, and then you add that cold weather on top of it, it's going to mean an additional set of problems. Cold air is forecast to sweep across China and cause a slump in temperatures along with strong wind as measures have been taken nationwide to ensure people a warm winter. They're saying that they're doing what they can. China is forcing the companies to continue to output energy. Do not stop at all costs. You must keep this going. However, there's a lot happening. Take a look at the China mean temps. You could see this from essentially the end of October into December where the expectation is. And that green line right there, if I pull up the highlighter, you can see that this is the 30-year normal. All right. But you could look that this is, in fact, a big gap, especially right now around the next week. They are expecting a big dip at this time compared to what is normal. What's that going to do? Of course, it's going to push the problems up another notch. This is going to put pressure on these energy companies to output even further. They're going to have some blackouts, they're going to have some shortages, and people are going to be upset. You know what happens when there is civil unrest. It usually does not end well. This is a translated article, just essentially showing you the same information, but I want to bring you it from multiple sources as well as directly from the source whenever possible. Pay attention to cold and warm. The temperature in the central and eastern part of this winter is generally colder. You can just see that for yourself. And I think for the majority of people, we are experiencing high levels of inflation. And then on top of all of that, yes, you got the cold weather. You have weather events of all kinds. We had fires. We had, hurricanes. We have all kinds of different things that occur, affect different places. But on top of what's happening, remember, actually, I should say underneath of all of that, is the Federal Reserve and their activities. They cause a disruption like no other. If you do agree with me that the Federal Reserve, the central banks around the world, have created an underlying havoc within this financial system, leading to disruptions and imbalances and everything else, hit that thumbs up button, okay? That's how I'm going to know that you are on the same page as me. And if not, hit that thumbs down button. Make your voice heard. Global food prices are getting closer to a record high. The UN's gauge of food prices moves closer to the 2011 all-time high, and it looks like it will surpass it by a long shot, all right? Higher fertilizer costs a worry for next year's harvests. Global food costs jumped last month, extending a march towards a record and piling more inflationary pressure on consumers and governments. I know I've heard from everybody in the comments section about food prices. Whether it's potato chips, yes, that's right, or maybe it's just regular everyday products that people are buying. They've been buying this same product for years and years and years, and they're watching the price go higher and higher. I have found that the products that require processing are often going to be more expensive than those that don't require processing or minimal processing, because you're adding layers on top of that from where it is originally created or grown or what have you, and then it is moved into the place where you eventually buy it. Okay, so the amount the middleman is going to affect the ultimate price. But you're looking here right now at essentially everything rising, some of them more than others. Costlier food, UN's gauge of food prices jumps, getting closer to a record high. This is surging. But I always want to highlight this and remind people that during the surge of commodities back in 2007 into 2008, if you looked at that, oh, it was crazy at the time. Oil prices hitting nearly $150 a barrel, everything's going off the charts. But we look back at that 5 years ago and we said, wow, I mean, look at commodities. This was just ridiculous. There was no reason for this. I mean, come on, there was a bubble. And now here today, we're seeing this and many are saying, oh yeah, this is, I mean, we're repeating the same mistakes over and over again. But there's a lot of speculation behind it too. We've got to be aware of that. What comes after? What comes after all of these things that are happening today with the food prices? The next thing, fertilizer. Grains on the move. The fertilizer squeeze is already sending commodity prices higher. Look at how these things connect. I try to connect the dots as best I can with the skills that I have, okay? I'm trying my best. The fertilizer is something that I talked about in the Money GPS trifecta method of investing. And this is supposed to be a way for you to understand how these dots connect. Yes, the food prices are rising. You could look at this in many different ways. There's the agriculture. You can get into the agriculture ETFs. You can simply buy food today to be able to lock in that price. But interconnected with that is the fertilizer costs. They're using fertilizer. They're using all these chemical fertilizers in the traditional farming. Shouldn't really say traditional, but let's say normal farming today, that are using these fertilizers. They're getting more expensive. And why? I believe I had it right here somewhere, essentially saying that, guess what? They got to use natural gas. They've got to use these different things that have become more expensive. So that puts pressure on them too. So if the input costs are higher, guess what? Everything else is going to be higher as well. Meat. Sticker shock looms as $3,000 bonuses fail to end the worker shortfall. Again, processing of these animals, it takes a lot. So they are seeing a higher price. And then this. The article is about Evergrande and so on, but I want to just touch on this before we end off the video. With domestic coal prices still well above the government's target ranges after spiking to record levels last month, Beijing planners are using the energy crisis to push through regulation that reins in heavy emitters such as cement, metals, refining, chemicals, and glass. They're talking about what they are trying to do, what they are trying to achieve. Okay? They're trying to get their emissions down. That's what they're saying. But at the same time, you've got a crisis that cannot be reversed at this time anyway, because the demand is so insane. Not just in China, but we're experiencing roughly the same thing all around the world. The prices are rising considerably. At the same time, they're telling everybody, no, you've got to use less energy. But what's happened? If they put something, okay, you can't use that type of energy, what happens? Just like in China. Oh, coal, can't use that? No worries. Natural gas. What happens to the price of natural gas? It skyrockets. They can do that to natural gas. Okay, they're going to use another type of energy, and so on and so forth. They're trying to control this, but as I've said many times before, you push something down here, it comes up over there. It's just like a whack-a-mole. It's trying to control something that ultimately cannot be controlled this rapidly. You're trying to control billions of people in many cases, and this doesn't work overnight. You can't do this. So what I would say to you, the individual, is to get your stuff in order. How are you going to do that? Well, you're going to do it as best as you can, all right? You're going to buy products based on today's prices. Why? If you think that product's going to be more tomorrow, why not? Why not simply take your time right now, look at the products that you use, write them all down, and buy them today. You can do so. You could protect yourself and your family. This is an easy way to get ahead of the majority, because you know they are going to be the ones that are rushing to the store at the last minute. That's all. If you appreciate the information, hit that thumbs up button. You can always do so right down below. It helps me out, helps the channel out to support me. It makes it more likely that these videos end up in your search results. All right. If you haven't seen this video yet, you definitely want to check it out. All right, click it and I'll see you there.